Okay, so what is the Fed? I mean, what is a central bank? Why do we need them? Why is it so vaguely misunderstood? I hope to answer most of those questions for you today. First of all, let me start off by saying the Federal Reserve Bank, or the Federal Reserve System, is not a federal agency. It is not a bank. And it does not have any reserves worth anything. Let's talk about, first of all, let's talk about what is money and why is the Fed intertwined with money. What is the perfect money? The perfect money is something that's fungible. What that means is that a $5 bill is the same as a $5 bill. A $5 bill will give you 5 singles change. It's fungible. It's a store of value. Money has to be a store of value. Money has to be divisible. As the example I gave you before with a $5 bill and 5 singles. It has to be legal tender, which means it has to be something that the government only accepts as taxes, to pay your taxes. It has to be scarce. But the most important thing is it has to have the trust and the confidence of the people behind it. If you like the video, subscribe, and let me give you a little more data. Prior to the Federal Reserve System in the United States has been on times on a bimetal standard or a gold standard, which tethered the amount of money that could be in production because there was physical gold or silver backing up each transaction. But before the Federal Reserve in the United States, there were literally thousands of types of currencies issued by states, private institutions, public banknotes. There were script money. There was the confusion was incredible because what would pop into your mind is counterfeiting. It wasn't counterfeiting, but how would you know what the exchange levels are when you have all these kinds of money? That's how it was. There was fluctuations between different currencies. No national regulation. The money supply was connected directly to gold or tethered to the silver standard, or both. Along comes 1907 and the panic of 1907. That panic was the beginning of serious thought of a central bank in America. This panic was solved by one man. That was J.P. Morgan. He physically locked bankers into a room and did not let them out of his home until they came to a decision on how they were going to save Knickerbocker Trust Company and stop a run on the banks. Okay, so how did all this begin? In November 1910, on a rainy day in Hoboken, New Jersey, Senator Aldrich, who was head of the Banking Commission, owned a rail car. That day, a group of men arrived at that rail car and were told only to use their first names. The workers that served them on this last car of this train were sworn not to know. If they knew who these people were not able to conceal that. On this train, the last car of the train, were the most important bankers in the United States, and they were headed for a place called Jekyll Island, Georgia. That was an estate owned by J.P. Morgan. They arrived at Jekyll Island, and that particular meeting on July in 2010 is when the bankers cooked up the scheme of the Federal Reserve System, to be followed 2 years later by the Federal Reserve, the forming of the physical Federal Reserve System. And that was on December 23rd, 1913. I should say, along with the Federal Reserve System, the 16th Amendment followed, which was allowing the IRS to begin direct income tax of people. The Federal Reserve System guaranteed stable pricing. It guaranteed a way that banks would have to meet certain standards in order to exist. And the way the Federal Reserve, as it goes on, it met its next major crisis in the Great Depression. And what happened in the Great Depression was the President of the United States, Franklin Delano Roosevelt, ordered all Americans to bring in any gold coins or certificates. The reason why was because there was the potential of people hoarding gold and getting rid of their cash and bank runs. Then in 1944, there came along an agreement called the Bretton Woods Agreement, which was an agreement where the world decided to tether gold to the US dollar. This was the beginning of the financial hegemony of the United States. John Fitzgerald Kennedy, one of the conspiracies about John Kennedy was that John Kennedy wanted to produce silver certificates. He wanted to either expand the money supply or kill the Federal Reserve. So some of the conspiracy theories are out there is that the Federal Reserve may have played some type of role in the demise of John Fitzgerald Kennedy. As time went on, during the Johnson administration, LBJ spending on the Great Society and the Vietnam War, Charles de Gaulle actually physically sent a ship to New York to pick up the gold. You gotta remember that time was World War II had just ended. All of the major powers in Europe had sent their gold to the United States for safekeeping. So all that gold was sitting somewhere in the U.S., I should actually say in the Federal Reserve Bank in New York. And countries were getting nervous and they wanted to get their gold back. As we move on, in 1971, there was a famous television program called Bonanza that was on TV. It was the most popular program on TV. And it was interrupted by President Nixon with something called the Nixon shock. This, to me, was one of the most dramatic and important points for the Fed and the separation of dollars from real money. On TV, President Nixon told the world that the United States was leaving the gold standard and the dollar would float on the Forex market. Dramatic, dramatic piece here. The 87 stock market crash came. Alan Greenspan, the head of the Fed, cut rates, lower reserve standards to try to keep the economy going. Then you had the Great Recession, where two terms, well actually one term was coined, which actually was being done in Japan years before. It was called quantitative easing, which the Federal Reserve got in the business of buying Treasury notes and buying corporate notes. COVID, QT, quantitative easing continued, and the Fed wound up and still has now a whole bunch of bonds and currencies that it's now trying to unload using quantitative tightening. Now, the Fed has one chairman. He serves for 4 years. That is Jerome Powell. He heads the Federal Open Markets Committee, which is an organization which is really the part of the Fed that makes all the decisions when it comes to interest rates and things of that nature. The Fed chairman and its members have to be approved by Congress. They have a 14-year term, and the Fed chairman has a 4-year term. I believe I said that. Well, now you know what the Federal Reserve is. You should have a good sense on what they do, how they evolve. I'd like to thank you so much for your time, for listening to this. I hope you got something out of this. I hope this may have cleared up some questions that people may have had about the Federal Reserve System. And please give me a thumbs up and have a great day.